When we were considering the ground we might cover in today's comments, I think you'll agree with me that 15 months ago, no one could possibly have foreseen the Ukraine war, unless you're some lunatic in on goings on inside the Kremlin. And I don't think any of us fall in that category. But it is the truth that it has dominated our thinking economically on a massive scale for this period. Elsewhere, I turn to a long established subject of mine, which is investment trusts. Well, we have, of course, at Master Investor, the contributions by Nick Sudbury, who knows his way around quoted investment trusts, and very interesting stuff he produces too. And I just feel that it's a great pity that the private investor cannot anywhere get a proper service for investment trusts. They are undoubtedly the vehicle for the long-term investor. And funnily enough, they've become more so under the new government, because the personal allowance for capital gains tax, which is of the order of £12,000 as we speak, is being halved in 23-24 to 6,000, and then halved again in 24-25 to 3,000. And this means that the great advantage of having one's own portfolio outside an investment trust means that one was able to take a profit free of tax, but now the tax-free allowance is in prospect a pretty slight affair, and as a result, people will just go on holding shares rather than selling on pure tax grounds. And although I hasten to remind followers that Sir James Goldsmith always used to say that he who invests or sells to save tax will shortly have no tax problems. Anyway, the fact is that I still think investment trusts are a sensible way for people to take a long-term view of investments, because an investment trust, if it is run properly by the management, is comprised with managers who take great care in selecting their chosen constituents for their portfolio, particularly in smaller investment trusts, i.e. those capitalized at, say, £200 million or something like that. And in this regard, I have covered over this last year New Star Investment Trust, which is the most interesting construction. When John Duffield and my friend Alan Miller departed Jupiter, they formed New Star, and for one of the constructions there of this fund management group was New Star Investment Trust, ticker code NSI. And John Duffield put a lot of his personal money into New Star, which is capitalized from memory, it's about 150 million, something like that. And he's got about 70% of this equity, held beneficially for him and his family, but it's managed by Brompton Asset Management, which is his management arm, which he's kept going after the denouement of New Star and its disappearing to Henderson. Anyway, the fact is that the shares are cautiously managed, and John Duffield, who controls the share, is not prepared to have his personal wealth handled on anything other than a long-term basis. Unfortunately, we don't live forever on this planet. And as a result, as we get closer and closer to his death, there are no signs of anything being done to narrow the gap between the share price, which is currently about 121, 122 pence, and the true net asset value. What this net asset value is, I don't know, but I should think it would have to be at least 180p as we speak. And that means that at an appropriate moment, it will be possible to close this discount simply by selling constituent parts of the trust holdings and then using the cash to buy in the shares in issue in New Star. And of course, the only person who can effect this improvement in affairs is John Duffield. And if he doesn't feel like it, why should he? He controls it, and he just wants it run economically. He's not interested in a short-term solution. He'd rather the shares that are held through New Star be handled properly for the longer term. So for cautious long-term investors, I think the family of Cawkwell have got about £500,000 invested. They just have to sit there and wait to see what happens. I think it's a perfectly sensible approach to investment. And as a result, for those who've got patience, New Star's NSI strikes me as a good investment. You don't have to worry about it. You just got to wait. But you may have to wait a very long time, that's all. I mean, obviously on his death, John Duffield's death, the thing will move. But as to when that is, I don't know. Perhaps I will predecease him. So one would take it from there. Anyway, one of the shares I have held for, as followers know, one of the shares I've held for a long time have been Rea Holdings, which is a plantation company in Indonesia. And for some time, the price of palm oil, its only product, was rather depressed. And then the price of palm oil started to improve. And as a result, the Indonesian government stepped in and imposed a great levy upon the export of palm oil. Well, this is all very well, but this is very much a case of heads I win, tails you lose on the part of the Indonesian government. And under those circumstances, I would normally have ducked away from such a treatment. On the other hand, I think there's some evidence that the Indonesian government regret this, and they have realized that such a plan on their part will simply cause the plantations not to be maximized to the advantage of anybody. And so as a result, they have eased off their levy, and this has attracted my friends at OD Asset Management to come in and take a stake. At this stage, it's only about 5% of the ordinaries. And I think the ordinaries are probably the way in, because the prefs have no equitable upside. And of course, they require the profits to pay dividends on the downside. However, they are paying off their arrears of prefs, and I think we should get the rest of the arrears of the prefs at the 30th of June 2023, which is what, 3 months away now, and that'll be 9p a share. You can buy the prefs at around 90p, something like that. So strictly speaking, on the basis that they're 9% cumulative prefs, that will be a yield of around 10% per annum, which I think is quite attractive these days, and notwithstanding the inflation and notwithstanding higher rates of interest on long bonds. Anyway, that of course, that's a judgment call. If I were merely slavishly inclined to follow another, I would follow in OD Asset Management. But instead of buying the prefs, I'd buy the ordinaries. And I think that's a good investment. And they're around £1.10 now, something like that. And you don't have to buy them aggressively. You buy them, tuck them away, and see what things come to. Turning elsewhere, again, this is an unquoted investment. And this is Wallstreet Group, which is the new name for, it's been around for a year or two now, the new name for Knievil, that appalling scam, which has now been tidied up mercifully. And it's just a question of waiting until various litigations have been sorted out. I would think Wettis Group is probably a fair bet at around 25p, but you can only get them on the Aquis exchange. And some people say, well, I refuse to deal on the Aquis exchange, and I'm just going to we'll leave that alone. I sympathize with that. It's a perfectly reasonable attitude. But it's for those who are prepared to lock up capital for a long time. And I may add that, for instance, my elder daughter's SIP is something she won't draw upon for perhaps another 20 years. And therefore, one in that portfolio, one can take a long-term view. That's exactly what I've done on her holding of Wallstreet. I'm hoping that with a bit of luck, these shares, as I say, currently 25p, could easily double. But again, there's no guarantee attaching to that. Anyway, elsewhere, another interesting company which has come across my desk is Scholium Group, SCHOLIUM. And I always thought that that was going to be a terrific buy once inflation took off, which I thought it was certain to do. But unfortunately, it hasn't caused private investors to turn up at Scholium's headquarters in the West End and buy rare books as an inflation hedge. They haven't. Equally, I can't bring myself to sell the holding in Scholium, but I think somehow, somewhere, sometime, the shares are going to pop up closer to net asset value, which is now about 70p, as against the current share price, which is about 35p. And so I think I'm quite happy to stay with that. Elsewhere, there's the chairman, Jim Mellon's company, Wettis, WEBIS, ticker code WEB, hanging around. And here the the boss, Ed Cummins, came by here, I don't know, about 6 weeks ago, and we discussed Wettis. And although it's capitalized at around £8 million or something like that, and the net tangible assets are a tiny fraction of that, it's also true to say that one day the Americans are going to let sports betting be much more extensively legalized than it is at the moment. And I think Wettis will probably succeed. For instance, Wettis did a deal with Frank Stronach, who's a big investor in race courses. He controls a lot of them in America. And two well-known courses are Santa Anita and Gulfstream. Santa Anita is, of course, over on the West Coast, and Gulfstream is in Florida. But these are big operations. And Wettis is in there such that Wettis's punters can, over the internet, bet on Frank Stronach's courses. And I would have thought this is going to succeed. Furthermore, I suspect that Wettis is going to make further investments in race courses, which will be standalone investments to join its harness racing investment back in California, Sacramento. And I think that could work. At least I certainly hope so. I know that Jim has been carefully waiting to see what happens there, but he can't do much about it, short of getting interested in betting, which I don't think he is, and going to America, which also I don't think he wants to either. He's very happy being ensconced in the Isle of Man, and as a result, I don't think he'll be departing anytime soon. Wettis are now about 2p. I don't know how one goes to buy them. You can't buy more than, say, $250,000 or $500,000, no more than that. So whatever policy decision is taken in relation to Wettis, it will have to be followed up cautiously, and perhaps it will come off. Where I do think there is an astonishing opportunity is in the chairman's Manx Financial Group, which is ticker code MFX, which I bought extensively at 8p some years ago, and was then very surprised that nothing happened. But I think the fear was that with lockdown, there might be widespread bad debts as people simply refused to pay for their car loans, and that was that. But it didn't happen. And as a result, MFX has emerged in a strong condition this side of lockdown, and I think will go on doing well. For instance, although Jim is not, he's described as executive chairman, the fact is that Denham knows the business very well, and everywhere one looks around the portfolio of MFX, things are coming along very successfully. They, on the basis of the results announced a couple of weeks ago, the shares advanced very sharply, and I wouldn't expect the shares to go ahead sharply for, say, the next 3 months or 6 months. But I think they will, because quite clearly the net assets are supportive of the current position, and the price earnings ratio that's emerging is quite attractive. I'm not sure what it is, but I wouldn't think it's more than 6, and it may be dropping. And furthermore, there's a dividend, which of course, the absence of which inhibited the appeal of the shares for a long time. good one understands it from the management's point of view. If you pay a dividend, you remove vital capital to expand the business. And since at all the time that they have held the dividend back, the business has been going very well. So paying out a dividend is not a particularly wise approach. Anyway, the fact is they have done that to good advantage. Where do we go from here in the coming year? I simply don't know. I'm fearful that Ukraine could engage us in war somewhere along the line. I hope it doesn't come to that. And there's some sensible people around to stop our involvement. Certainly Sunak is not a fool. Indeed, I think his performance to date has been faultless. But the reality is that events can happen on the build-up to war. And as a result, there is no happy means of acquiring certainty. It just doesn't happen. So with that rather gloomy prognosis, I wish you all well for the rest of 2023 and possibly 2024. I don't know, but I have little else to add, which I think must be said. Good afternoon.